right. That was a tough act to follow, huh? It was quite good.
Definitely.
He's a dear friend, and I'm so glad he could join us today. And thank you all for coming today and sticking around with us. We're going to end on a high note because we've got some really excellent speakers here, leaders in the financial services industry who know a lot about this topic. I'm going to start right here to my left, my good friend from Akbank. Why don't you set the stage for us, Kaan? Tell us a little bit how you see, open the aperture, how do you see the outlook for the sector? What are some of your challenges and opportunities? And then how do you incorporate sustainable finance into your strategic vision?
Okay, thanks a lot. I would like to thank to you, especially to you, Tim, for having us today. And in the same time, I would like to extend my gratitude to especially Turkish Banking Association, because this is a very strong initiative in the same time. And of course, this is very lovely and wonderful venue. Thanks for Ziraat Bank, actually, having us here. So, actually, I would like to, before speaking of our banking, sector, let's once again look into, especially environments that we operate in Turkey. I really would like to touch upon some potential of Turkey, first of all, and then I'm going to back to sector, actually. 81 million population, hard worker, young, eager to succeed, highly skilled entrepreneurs. Plus 45% of the population is under 29 years old. Amazing. Very young. In the same time, well-diversified, widespread customer base for the banking system. 50% retail, 50% corporate and SMEs. And there is a huge untapped potential here. For example, households debt to GDP is 10%. Pensions to GDP, 3%. Mortgage, 2%. Speaking of that potential, especially women's labor force contribution, it's now around 37%. It was 25%. Very high digital penetration. Roughly, this is very new statistics actually, 44 million, customer in the sector making digital payments. Roughly $65 billion volume, it's coming from that digital payment systems. On the corporate side, stronger balance sheets within the last 2.5 years, FX deleveraging, we have seen a huge progress there. And of course, the short-term next FX position. Actually, our minister, emphasized some of that points.
He did.
And of course, the SMEs, the dynamo of the actually Turkish economy. Back to your question, actually, you know Turkey very well. And at the same time, you have very in-depth knowledge about the banking system. I remember our last meeting, it was a kind of roundtable, lunch, I think. And you were talking about how resilient Turkish banking system. Indeed. 2 years ago. Actually, I would like to say that, yes, we are still very, very resilient. So there are lots of important skill sets. For example, our adaptation capacity. This is very important skills. Agility. Actually, during last 2.5 years, as a banking system, it is not, important not only operate your, a bank, but in the same time, how agile you manage your balance sheet as well. Our very strong risk culture and prudent approach, regardless of the macro environment. And finally, we can succeed in running the bank with the ability of the focusing on the future in the same time. So, let's talk about today. As our minister, mentioned very well, described the improvements, very, strong signals coming from there. I can say that despite various global and domestic challenges, Turkish banks have delivered strong return on equities and maintained balance sheet stability. Since last May, economic policies have geared toward reducing macro-financial imbalances. As again, Minister, emphasized, this rebalancing process brings some challenges for the banking sector in the short term. However, recent policy actions have proved effective in moderating loan growth. Especially Turkish lira loan growth has come down significantly, which is below inflation run rate. And of course, this slowdown in loan demand and the decline in the Turkish lira loan-to-deposit ratio, which is lower than 90%, surely limits the core operating profitability of the banking system. The rise in the interest rates is also likely to have repercussions on the asset quality. We know that. We are well prepared for that. Especially, I can tell that this risk seems well manageable, thanks to our banking sector's cautious provisioning policy and the strong uptrend in generating non-interest earnings to support profitability. Putting aside the short-term challenges, actually look into a much prospective way, maintaining macro stability, Tim, will create a conducive environment for the financial sector over the medium to long term to utilize the untapped growth potential regarding demographics and digital advancement, as I mentioned before. Young demographics, I'm underlying this, strong digital penetration, and relatively low indebtedness compared to peer economies emerge as the main drivers of the prospective growth of the banking sector in extensive margin once the macroeconomic stability is maintained. Actually, I would like to give you a summary about our banking sector. So, if you let me go, I would like to go especially within the sustainable finance, the pillar. So, this is very, very important, subject that I really don't want to miss any words. So I really would like to skip to my notes. So, sustainable finance is one of the 4 main pillars of our ESG strategy. We have long-term targets and commitments to contribute to more sustainable future. By the end of 2023, we reached a total 226 billion sustainable financing. We have already exceeded our 2030 target. So we revised that target to 800 billion Turkish lira. So now we are eager to reach that target also. Moreover, we strengthen our goal of becoming a net zero bank by 2050 by joining the Net Zero Banking Alliance. We announced, as you know, our sectoral emission reduction targets for 2030 in accordance with the Net Zero Banking Alliance. We are now working on sectoral transformation, which is very important, which will further enhance sustainable finance integration into our strategy. As Akbank, we enhance our sustainable finance activities in line with sustainability trends and expectations of the international financial institutions, investors, and the financial market. Within this respect, we updated our sustainable finance framework, which serves as a basis for defining the criteria and methodology followed throughout our sustainable finance practices. With our updated framework, Tim, we aim to strengthen our existing product portfolio with the new thematic areas in green, blue, and social projects, and to accelerate the green transformation of our corporate, commercial, and SME customers. We are also strengthening our product portfolio according to the needs of our customers. We have already launched more than 18 products and services within our existing sustainable finance framework. We have recently launched, our sustainable deposit product. This is the first deposit product in the market, specifically crafted for the commercial clients. This innovative product empowers our clients to actively contribute to projects aligned with the UN Sustainable Development Goals, fostering positive environmental and social impact at the same time. So the other important thing is here, the cash management. We are again trying to create a kind of positive differentiation within looking to our customers' cash management needs. So establishing a sustainable supply chain structure is key challenging factor because this is very complex. There are lots of parties within the chain, so it is crucial to, due to wide positive impact it creates, we are working closely with our clients to develop custom-made sustainable supplier financing system to enhance green and social transformation on customer supply chain systems. Another new product, actually this is again the first product in the market, we launch SME Eco Transformation Package to help our SME customers turn to risks they will face due to the EU carbon border adjustment mechanism. This is really crucial. Into opportunities and increase their competitiveness. So we are trying to have more competitive SMEs in Turkey. With the SME Eco Transformation Package, we aim to encourage and finance all activities aimed at reducing the carbon footprint of SMEs and lowering their energy costs. There is another package, Turkey's first Blue Finance Package. We are offering 3 different loans to develop sustainable tourism. Tourism is one of the most important, revenue generation of the Turkish economy, as you know very well. We are aiming to reduce the environmental footprint of marine tourism activities, protect the seas in port activities, and accelerate the transition to low carbon. As of end of last year, 96% of the risk balance of our project finance hotel portfolio loans consist of the projects we follow within the scope of blue financing. So, last words, I can tell that our sustainable finance products and services are not limited to these areas. We have additional sustainable finance products for renewable energy, wastewater management, waste management, sustainable agriculture. Last but not least, we are in the same time trying to provide digital tools and services. This is very interesting for corporate greenhouse gas calculation, reporting, and the ESG gap analysis just free of charge. Thank you for the time. Actually, if you have any question, then we can go.
We're going to come back. We have questions. 2 words that jump out. Resilience. You always tell me that the financial leaders here have a bachelor's degree in crisis management. You've seen it all over the decades, and you have. Yeah. The second is innovation. And the financial sector here is incredibly innovative, both in the digital space and now the sustainable space. Another firm that's very innovative is ING. Samra, tell us a little bit about your perspective. It's a messy world we live in. I guess it's always messy. It feels messier now than ever. So how are you at ING navigating through these challenging times, geopolitical, macroeconomic, and how are you incorporating sustainability in your business plan as well?
Maybe just shortly mention, since the pandemic, we faced several problems. Started with supply chain, then energy crisis, as an output, the high inflation environment, and winds of wars in the mid of Europe and recently in Middle East. So it was maybe a period of time we had a lot of disruptive changes and uncertainties at the same time. For sure, undoubtedly, this period left long-term impacts on the global economy. And Turkey has experienced the negative outcomes of this environment at the global level, but also we had also our individual issues in Turkey. So it was there was a lot of pressure on the financial sector related to this. I'm happy that we are now seeing the recovery, and this recovery is on the right track. We also recently saw the outcomes of the program implied in Turkey, but also all the efforts at the global level. I'm a little bit hopeful going forward, and this period of time has been a good test of resilience for the whole world. We were a little bit exercised this before as an emerging country as Turkey, but once more, this showed the resilience of financial markets in general. That's an important thing when we look for the future, I think. Despite the challenging times, we always prioritize the financial health of customers in those terms. So we try to help them to take better decisions for themselves. But one of the significant outcomes of the crisis, all the challenges around, was the pressure it put on the prioritization of issues related to ESG. And ESG, by definition, long-term. When we compare it with the current visa agendas, we saw that pressure. Also, it's reflected in the green bond markets after the peak in 2021. Then we saw a decline in 2022, and this year, hopefully, it's picking up. We are creating our future with the actions that we are taking now. We should be aware of this. And with this awareness, as ING, no matter the busy agendas are, we are putting the sustainability, as our colleagues shared before and now, at the core of our business, at the core of our strategy. And we have a quite focus on our commitments. We are, as ING Turkey, we are channeling the expertise, the capabilities to Turkish clients via providing access to ING network, of course, in Turkey. And it's also reflected in the ESG-related business we develop in Turkey. For last year, we reached out to 5 billion euros. It's a huge number. If we consider also proudly, I would like to say it includes the debit green bond issuances of Ministry of Treasury and Finance and Istanbul Municipality, Metropolitan Municipality. And we are one of the action leaders in the wholesale banking in that regard in Turkey. But also, we cannot just deal within the wholesale banking itself, but we are all launching the products, like Kaan Bey explained, that covers all segments of our customers. So that's also critical. We are proud to see this development in Turkish banking sector as a whole. So it's a big force for the future actions that we will take. As bankers, of course, providing funding is the ultimate goal. But at the end, what matters is that when we come to sustainability, the impact that we create. That's why we, as ING, a holistic approach in that regard. And I think it should be going forward the path that we all have to follow. We start helping our clients starting from the establishing their sustainability roadmap. So providing access to international debt and capital markets for sure, but we also focus the transition plan, we improve the plans with them, and we finance them when needed. We all talked about the transformative power of finance. We are all truly believers for this, but not only from the investment perspective. It also increases the awareness and also encourage the clients to take action in that regard through financing and through accessing capital and finance. We also, as a banking sector, also thanks for the efforts of our Bankers Association and the leadership of our banking regulation, BRSA, I also would like to thank to them as well. We have a good collaboration within banking sector in establishing the regulatory framework for the finance sector. And we are not active in setting the regulations, but also big banks, the big players of financial sector are also signatories of global alignments, agreements. So we are very much engaged with the global priorities in that regard. And we are also supporting NGOs. We are working with them as there are many stakeholders in this roadmap. We are working with the circular economy supportive NGOs, reporting specialized NGOs, sector representative platforms. And as ING, we are very much also supportive in that regard, using all the power we have, the experience that we have at the global stance. But again, as this is a collective action, not only financial institutions, we should also have close relationships, and we should take it a little one step further in between public and private. I think this is also an important aspect that I would like to mention.
And indeed, it does take a village. It takes the whole ecosystem to make success. Ibrahim, there's a great saying that says, capitalism without capital is another ism. I guess you could say sustainable finance without capital is just an aspiration. It's a dream. How do we mobilize capital in search of this dream? How do we fulfill the aspiration with real money on the ground, real projects?
Since I have been already representing here development financial institution of our country, for that reason, in order to capitalize especially these kind of, let's say, finance, development finance to these products, we should be together with the private banks, since we have been here 2 development institutions and 2 private banks, but we do not want, we should somehow be proactive as a development finance institutions. In order, we will be somehow use our leverage in order to attract especially private money, even from capital markets or from the private banks. However, we will, of course, we will have a longer maturity. We will have we are not so tied up with the return on equity, let me say, KPIs. But rather than that, we are a bit aligned with the ESG or some really social, environmental, governmental, let me say, governance KPIs. These are the main issues. We are already mission-led institutions. For that reason, our role is to be a kind of catalyst in terms of financing, especially development in this kind of projects. In terms of the capital markets, of course, the government is really key. Public-private, as she has already told us about in her speech regarding with public-private partnership is very crucial for that.
Right.
We should somehow get a kind of portion. However, with the ECAs, with the bondholders from the capital markets, from the even private banks, we somehow tailor that kind of, let's say, projects accordingly. Of course, we are sacrificing from our, let me say, from returns, since we are development finance institutions. We have that kind of role. However, in order to have international standards, we will invite all the parties, both international money and local money, and of course, private sectors, in order to make their projects viable. For that reason, we think that our role is very key and vital, and we have understood this even in pandemic, we have seen it, even in wars, we have seen it. For that reason, we are now currently as a bank. When dealing with the pandemic, we have already got from different institutions for the pandemic, for the working capital needs, other than a kind of investments. For the food supply, we are already having that kind of line for the food supply as well, since we have faced with the war. For that reason, we are here as a development finance institution, even bad times and good times, and we should somehow share that kind of, let's say, our, let me say, profits, or let me say, all the what we have in our hands with the private sector. So that's the main issue. But of course, in terms of the government involvement, they should somehow create that kind of framework for ourselves. I mean, ESG is very vital. We have understood that. We are currently, as a banks, we are being financed by the sustainable finance instruments more, I can say cheaply. However, in order to motivate us, even the investors, we should give them a kind of incentives for both the banks, for the financiers, and for the investors as well. That's how we can, I mean, as a government, we can do that kind of things. The framework is very crucial, by the way. I mean, we are thankful to the Banking Regulation Supervision Agency, even central banks, in order to involve their, let me say, their commitments to do ESG. So how we can really have that kind of, let's say, role in terms of sustainable finance.
You're right. The central bankers of the NGFS and other bodies are very critical to this conversation. Let's keep the conversation going on how do we mobilize capital with our good friends from the EBRD. I was at your headquarters in London last week for a discussion about blended finance. Obviously, you're an important institution for the region. You've been at the forefront of these topics. Dive a little deeper and help us understand how the EBRD is mobilizing capital here.
Yeah, thank you very much. Actually, with the climate targets and ambitions to achieve the net zero targets by 2050, there is also very in speed technology developments to achieve that. And this means that on the one side, the risk of implementing these new technologies into the operations of the companies are increasing, because most of those technologies are either untested or still very expensive to be included in the operations. So when we consider those developments, blended financing becomes very important. Actually, the source of the blended financings are either the governmental donor funds, or EU or large institutions, and also there are a investor base who is there for long-term benefit of the investments. So those are the sources of the blended financing, and of course, IFIs, multilateral financing institutions, are the facilitators of using this blended financing aside the commercial financing. One thing which is very important to highlight here, blended financing is not a tool to compete with the commercial financing. It is rather facilitator of the commercial financing world. And with the blended financing, what we are really trying to aim is to take over certain risks where neither commercial financing markets can take or the clients may take, or if it is very expensive, to reduce or to make those investments tolerable by introducing some cheap financing aside the commercial financing, and or to use it as a kind of motivating factor to achieve certain SDG targets which we introduce as part of the blended financing. As EBRD, we are using the blended financing primarily to address the market failures, mobilize commercial co-investments, or enhance the transition impact of operations beyond what we as EBRD can deliver with our own account of commercial financing. So, I mean, I need to make it one thing very clear here. Although we are IFI, we are not really here crowding out the commercial financing market, but rather, and we are acting like a commercial bank when it comes to financing projects. However, with this kind of donor sources, grant sources, or concessional financing sources, we are trying to develop new products such that it can act as catalyst or facilitator of financing projects by the commercial financing market. So from that point of view, we are very selective, introducing blending into our mobilization activity, and using very targeted and well-governed process in order to leverage the donor funds and mobilize the co-investors effectively. So this means that using blended financing is not a very extensive source. Rather, we are really trying to use it to the point on a very scarce manner so that it doesn't crowd out the commercial banking, commercial financing. Just for example, one example I want to give is a smart use of blended finance. Last year, as EBRD, we signed a B-loan dedicated donor agreement with the climate syndication platform. It is a 30 million euro in funded guarantees and technical assistance from Germany's International Climate Initiative, and it anticipates to mobilize 225 million euro commercial financing for the climate-related projects from various institutional investors over the next 8 years. And this 30 million part is there to really take over certain risks or minimize certain risks that commercial financing market, which we are trying to mobilize, cannot take. Another good example is our cooperation with EU. You may have heard this product called EFSD. Last year, we have also introduced Turkey into the EFSD program with EFSD Plus. And together with EU, we have this first loss cover or grants or certain donor funds attached to the financing which we provide, such that especially those, for example, we have a window called HIBAR. There are certain technologies like in storage, hydrogen, or there are new technologies in the circular economy, which is very expensive to take at the moment by the private sector. So we are planning to use the EFSD Plus, especially for this kind of investments, to incentivize the private sector to make such investments. Another example, if I give, is GEF, which is our green economy financing facility, which we have developed last year. And there our Turkish banks are actually our very important partners. And the aim there is, again, with this program, it is a 750 million euro program, together with, again, a blended financing from Climate Technology Fund. And again, there the aim is to finance those green investments, sustainability investments through Turkish banks, especially for the SMEs who are not able to take over certain costs at this stage to make their operations more sustainable, efficient and effective. So GEF will serve that purpose. I can give many examples of this kind of blended financing products we have developed, but one thing which I want to also highlight is Cherry, for example, is for the circular economy regional initiative, which is targeting Turkey and Western Balkans. And there the aim is to incentivize the circular economy and to use of the waste recycled and used in the productions in such a way that it provides the resource efficiency and cost reduction. And there are certain, for example, targets we introduce into the project. And once those targets are achieved, the cost of the financing reduced with the blended financing we attach to the financing we develop. One thing which I want to highlight, last year, as EBRD, we have been able to attract over 1.1 billion euro of sources of concessional financing and donor financing from various sources. And unfortunately, Turkey is unable to get 30 million euro out of it. And now, as EBRD, as well as other IFIs, we are really trying to increase the portion which is allocated for Turkey. You may ask me why Turkey is allocated less than other countries. Turkey is seen more developed compared with most of our other country of operations. That's one of the reasons why there's a perception that Turkey may handle their own investments and financings without need of any support. We are trying to change this perception. As Kaan Bey also said, having such a large SME base in Turkey and knowing that these SMEs are rather more fragile from financial point of view, to take over those high-cost sustainable solutions at this stage, blended financing will play a very critical role, especially for the SMEs, to implement the SDGs in their operations. So our aim is for future is to make sure that we are trying to attract those sources and mobilize it also for Turkey and our countries of operations, such that it can act as catalyst and accelerator for the SDG investments in our countries of operation. Thank you.
That's perfect. We've gotten a number of questions from the audience, and thank you for sending them to me. So I'm going to pepper them in. Shirley, I'm going to come to you because there's a lot of technology questions here, and I had one earlier about the use of AI.
Yes.
But what about also data initiatives for sustainable finance? So how do you think about AI and data as an important driver?
Yeah, well, it is very important. Just I want to give you one number which explains you why AI and digitalization so important to achieve the sustainability and SDG goals and net zero targets. There was a work analysis done by Accenture in collaboration with the World Economic Forum, and it was announced last year. It states that digital technologies and AI, if scaled across the industries, can deliver up to 20% of the 2050 net zero targets and in the energy, materials, and mobility industries. So this already is a very big portion, 20%. I mean, the investments which need to be done until 2050, huge, and there is a big funding gap. And just by introduction of AI and digitalization, if we are able to save 20%, I think that's an unignorable part to be considered. Where, as EBRD, so basically digitalization, what I want to say here is, will help to drive energy transition in 3 ways. First, by helping to make existing operations more effective and efficient, and improving mechanisms to monitor and track the emissions. And second, by helping to accelerate the design and operate processes that lead to new tools and less carbon intensive methods. And third, by enabling new business models with economic incentives to help accelerate the transition with more effective collaboration and better management of diverse energy mix that is emerging as the world moves away from fossil fuels. And I mean, just to give you an example, using AI will help us to measure what are the achievements we are making with the sustainable investments we are making. And then by using these measurement tools, it becomes a data source in order to make necessary adaptations, changes, modifications, such that it can help accelerate to achieve the goals. And which means it is reducing also the cost of the investment with the right data measurement system. So from that point of view, AI becomes very critical in order us to be able to access to the data which is necessary for us to plan for the future. So most of the cases, digitalization is seen just as a cost. However, this perception should really need to change, because digitalization actually is the accelerator of the green transition and achieving the net zero targets for 2050. Therefore, as EBRD, we have put the digitalization, digital approach, adapted the digital approach in 2021. And accelerating the digital transition has been recognized as one of the important tools among the 3 strategic priorities we have, which are green, inclusion, and digital. So it will help, we believe that it will help to play a very important role in supporting our mandate of building competitive, green, inclusive, integrated, resilient, and well-governed economies. So basically what I want to say, there is a really high dependency of the digital with this two other priorities, the equality and inclusion, as well as the green transition. And these three should be always considered together going forward in order us to accelerate the achievement of the SDG goals as well as the net zero targets. So therefore, as EBRD, we are focusing on establishing the foundations for the digital transformation in our countries of operation, promoting the adoption among the clients and governments, and supporting the innovation through new entrants and across markets. And one thing which is very important as well, with the digitalization and artificial intelligence, it is also possible to minimize certain risk by making predictions and taking necessary precautions in advance. And that, unfortunately, nowadays our world is always, every day, coming up with the new surprises, like the flood in Dubai, which we would probably never expect, or the flood we had experienced in our country, Turkey, last year, which was really causing a lot of damage and cost. So those kind of risks may be also predicted better, and certain precautions can be taken to minimize the impact of the climate risk into our operations, daily lives, and future steps that we would like to take.
Unfortunately, we're out of time, but Kaan, I'm going to give you the last word. You've heard a lot here on technology, how we use data centers, AI, the importance of mobilizing capital, public-private partnerships. Yeah. You're in the C-suite. You've got the dashboard in front of you. You're allocating capital. Mm-hmm. How do you think about this in an integrated approach? Take us out of this panel.
Yeah. Maybe last words, actually, thanks for the very, fruitful, conversations here. Actually, I think for Turkey, the most important thing is a carbon border adjustment mechanism, because as a main, supplier, especially country to the Eurozone. So since our total export to Euro is roughly 41% of the total exports, so this is going to be huge, the cost, especially for our, exporters, including SMEs, the corporates, whatever.
Right.
So we have to, much more focus on a sectoral basis in order to improve their green transition finances. So, of course, there are lots of aspects, including AI, the logistics, supply chain. For example, if you're talking about the supply chain management, so you have to be aware of the weather conditions. So there are really disrupting weather conditions we have been facing, within the last 4 years, 5 years. So there are lots of areas that we can increase the efficiency in order to, especially managing the whole logistic chain, etc. So, this is very important to the point that it is, a kind of the common purpose of the Turkish banking system, regardless of the state banks, investment banks, private banks. There should be only one target, that we have to improve our sustainable finance, the focus. So that is all I would like to share with you, because we are out of our time. So
I think that's a nice summing up. Ladies and gentlemen, a round of applause for this great panel.
Thank you.
And that's it. Okay, thank you very much.